Oliver, today we had a relatively small deal within France's banking sector with Société Générale buying NewEdge. Why is this sort of significant for the bigger market?
Well, so it's a two-part deal they've announced today. Société Générale is buying half of NewEdge from Crédit Agricole, so Société Générale will take complete control of NewEdge. That's a derivatives broker. And in return, Crédit Agricole is increasing its stake in Amundi, which is a joint venture they have in asset management. So it's a sort of two-part deal. And the significance really is that it tells us a lot about the differing strategies of both the banks. Expanding with NewEdge is right up Société Générale Street. They're all into expanding their investment banking business, while investment banking is an area that Crédit Agricole has been pulling back from. So it really demonstrates the different strategies of the two banks.
Okay, and why is it that they've got different strategies? So why is it a good case for SocGen to get back into kind of investment banking, and why is Crédit Agricole trying to get out of that?
Well, a lot of it stems from where they are. Société Générale's investment bank is about a third of its income, and it wants to keep it as a third of its income. And it says that when there's capital to deploy, it wants to deploy it in investment banking. It's very keen on investment banking, even though it's volatile and quite capital heavy. As SocGen says, there's a lot of opportunities there. It says, for example, that increased moves to move derivatives trading onto exchanges will help brokers such as NewEdge, and likewise strain on banks' balance sheets will force corporates to borrow through the bond markets, and that will also help investment banks. So Société Générale thinks there's a lot of good things going on for investment banks over the next few years. Crédit Agricole, on the other hand, is more of a sort of back to basics strategy, and it's really been shrinking its investment bank right down over the past couple of years. In the first 9 months of this year, we had results today, its investment banking income was only half the level of 2010.
Okay, and what does this really mean for the wider European banking sector? Is this significant in any way?
Well, the deal itself is fairly small, not significant, but it does show that the banks are taking quite clearly different strategies towards investment banking, and that's going to continue. There are some, such as Crédit Agricole and quite differently UBS, that are pulling back quite radically from investment banking. Others are either maintaining or growing their positions, and that's the way it's going to continue, given that investment banking it's volatile, it's capital intensive. The winners do very well. Those who come lower down the scale really do not so well at all. So it's really about focus now.
Okay, so overall a fairly small deal from Société Générale, but it's really bigger. The impact is really what it means for the wider banking sector. Thanks, Oliver.